Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the world of Bitcoin, taking a look at what's been going on most recently with BTC and what I would expect to happen next. Now as I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe. Tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. We also have links to the new Cheeky podcast, a fantastic way of staying up to date with everything crypto on your daily commute to the office. It's available on Apple and Spotify along with YouTube, so why not check that out if that's your bag. Okay, let's waste no more time though. Let's jump right down into this. Here we have Bitcoin paired up with USDT on the hourly chart and Binance is the data source. Now we were looking at a few things yesterday and some of it's actually been invalidated, so let's go ahead and just draw those back out. So initially we were kind of taking a look at maybe a 5-wave structured move upwards here. Okay, so we hit this point and then obviously we're looking at coming down and then bouncing up. Okay, this has been invalidated because wave 4 is not allowed to cross wave 1 unless of course we have a diagonal or something kind of like that. Okay, so it's possible that it's a diagonal move, but I think we've slipped down a tad too far to really have that one valid now. The other one that we were looking at briefly yesterday was a micro movement, which would have been something to this effect where we have a little wave 1, wave 2 down here, wave 3 comes up, wave 4 not crossing wave 1, but in this particular case it has, so that's also not a correct count either and is invalidated. So instead we're left with the most logical explanation as to what's going on here, and that is that this is just a simple 3-wave structure and we complete the wave C just up here at the top with our high point actually just up here at 22,000. We actually just grab hold of this line just here, $22,527. Okay, so that becomes the top area just there. So, you know, I've got this little area down here, right? This is a 1.618, comes in at $20,054.3, right? So essentially what this is meaning is that I've taken a measurement between, if I grab my pencil here, this little movement, the bounce to the upside, and then this descent just here. Okay, now what this is doing is it's basically saying, are we in a 5-wave structure move down? And we have a wave 1, wave 2. If we hit this area, 20,054.3, then that becomes wave 3. We have a small bounce and then we pull back down even lower. That's a 5-wave drop. Now, if I zoom out, as many of you guys will probably be aware, we are still potentially inside our drop to the downside here, okay, where we have significant room to the downside. Now, if I jump this up into a 4-hour chart, just pull this back in here for a second, you can see that we are looking and tracking to the downside. We have completed 5 waves just over here, which I've kind of got marked out as a 5-wave drop with a 5th wave. Now, it's possible that this is still a 4th wave and we still have that one last little leg to the downside to be had, okay, and that would actually then complete this entire structure here. And so we are kind of taking a look at this and we are thinking that we have a drop to somewhere between $14,000 and $16,000. Okay, we still think that is likely, but at the moment, as I've got this drawn out here, we're waiting to see whether or not we are going to drop back down into this big collapse in terms of price. So that's kind of where we sat at the moment, kind of just waiting to see if we can continue this motion. Now, confirmation of the room to the downside actually occurs here at $17,622. Okay, let me just zoom back in on this. So at 17,622, we do confirm new lower lows and all of that kind of good stuff. Now, the other thing that we've got to bear in mind is that we are still potentially in a bear flag. Okay, so we have our little upward trend line just here, for example. We could come back down and retest this and continue to set these higher lows. Okay, that's always an option. And of course, we do have the upper side of this as well, where we are, potentially just setting these higher highs. But essentially what this is doing, if I actually grab a parallel channel, it makes it a little bit easier to see. If we just grab one of these, we just draw this in from the bottom up to about here, just pull it this way, right? In fact, I'll pull it up here, for example, okay? Then I zoom out, what we kind of have here is what is a pretty standard bear flag kind of scenario. It doesn't always play out, of course, these patterns, they don't necessarily always play out, and I've spoken about this before, and I'll go through a couple more in a second here. But essentially, here's your kind of pole going down, and then here's the flag section. Now, if you throw the volume on here, you can see it kind of disregard that little bit of volume there, you can kind of see that there was actually a bit more volume on this pole coming down, and then the volumes have kind of just died off, right? So very, very little volume, and a little bit more volume coming in right now as we're starting to dump back down. But essentially, very, very little volume there to actually support such a move. Now, so we have this as a potential pattern. Obviously, it is just a pattern on a chart. It doesn't actually mean terribly too much. In the same way that we have spoken about previously, a lot of people incorrectly saying that there's an Adam and Eve pattern. So an Adam and Eve is basically a V-shaped bottom like this, okay, and then an arc. And that's probably a really bad way of actually showing you. So I'll just take this off. And what I'll do is I'll delete these out temporarily, grab a line. Let's draw that in here for a second. So we have a V-shaped bottom that looks like this, okay? Then, of course, we would have our arc that basically would indicate that we have a double bottom, okay? Now, in the case of an Adam and Eve, I've spoken about this before, it's a double bottom pattern, which means you have to have a double bottom, right? And there's a small amount of tolerance to this. You can be within a certain amount, but this, to me, does not constitute a double bottom. It is so far away from being down here at 17,622. It is not an Adam and Eve. So very important that we understand that, not an Adam and Eve. And, we do have the potential to kind of maybe look at this as a cup and handle, but I think we've actually exceeded that as well. So again, a cup and handle would be, if we take it from here to up here, okay, so we have the upper end, we pull back down in here, and then basically a small handle would appear on this side, and it would normally be about there, okay? We wouldn't normally drop down this low. So I don't think a cup and handle either is going on here. I think essentially all we've done is have that really simple corrective move. Let me just get rid of these for a second and bring back all of that. A very simple corrective move coming up, and then we pull back to the downside. Now, there is no guarantee that we go down into lower lows. However, that is, in my mind, the most probable scenario given everything that's going on here. However, we can correct down, get very, very close to the 17,622, and then move on up again, okay? So there's lots of different ways of taking a look at it. I think the most probable is that we move on down, but there are some other indicators that are interesting to kind of take a look at. And I am going to go through one of these with you right now. In fact, actually, I'm going to do it on this particular chart here. We're going to jump up into the monthly chart, okay? And I'll see if this is actually not enough data. So we're going to jump over to the BitStamp data, okay? So here we have our monthly chart on BitStamp. This is paired up with USD. Now, what if I do, if I go ahead and just delete everything off of here for a second, just take all that off, I'll put it back in a moment. And what we're going to do is, there's something that a Discord member actually pointed out to us. He was talking about a few things, and essentially found this one really interesting, and I found it really interesting as well. This is one to keep an eye on. As with everything Bitcoin, there's a very limited amount of data. Okay, with a limited amount of data, things can change, right? There's no guarantee that just because it's happened in the past, it's going to happen again. We've got clear examples of this, right? Where, for example, we haven't dropped down lower than the previous bull run's all-time high until, of course, we did just a few weeks ago. So it's very important that we understand that, or just because it hasn't happened in the past doesn't mean it's going to happen or not going to happen going in the future, right? So what I'm going to show you is interesting, but it's interesting in the regard that we should keep an eye on it. It might be true, it might not be true. We'll see if it holds up in the same way that we had with the Gaussian channel. Basically, we're looking at the Gaussian channel. We've done some things new with the Gaussian channel in 2021 that hadn't been done in the past, but we still had the same outcome that the history told us was potentially, viable via the Gaussian channel. So take it with a pinch of salt, but this is actually really interesting. So I'm going to throw these two lines on here. These are EMAs. I've coded these ones to a 10 and a 20, okay? So this is a 10 monthly EMA and a 20 monthly EMA. Now, with these, obviously, they're just moving averages. And obviously, if you're familiar with the channel, how I feel about moving averages, they are just lagging indicators. And essentially, I think it's more important that we understand that basically an average or a moving average, simple moving average, whatever it is basically just an average price right now. What you'll find is people are reacting to certain things happening with a moving average or a simple moving average or, an EMA, for example, right? So it's only really the people that are reacting to something here, which is, again, the psychology of the trading aspect of what we're talking about. rather than the actual meaning of two averages crossing over. But here we do have a 10 and a 20, right? So in our white line, we have our 10, and on our yellow line, we have the 20 EMA, okay? Now, and what I'll do is I'll just check that just to make sure. Let me find where that is. Is it on here? Let me just open that up. Let me see if I can find... yeah, let's take this one. So, yeah, so the white is the 10 and the yellow is the 20 EMA. Okay, it's perfect. So at least we kind of know what that looks like. So what we have here essentially are some crosses that are going on, historically speaking. So we're going to take a look at this one over this side to start with, okay? So right here, we have a cross, okay? This particular cross right here. Let me actually go ahead and grab a circle, and I'll just mark that up right there. Okay, so that particular cross. Now, that cross happened 1 month after the low of the bear market. Okay, so that's why this is really interesting to me, and it's a great spot by our community as well. So, you know, basically what we have here is a cross that happened 1 month after we actually hit the bear market low, and that's really interesting. So we also have this point up here. We actually peak, and then we crossed, and then we continued rocking. I don't think that's actually of relevance just yet, but I'm going to keep an eye on that one as well. But over this side, we also have another cross, and the cross happened right here. Okay, and again, this happened 1 month after the bear market low was achieved. Okay, and then of course we have a cross here, and we just rallied on up afterwards. So interesting kind of stuff that was going on. Now, of course, we come up to where we are. Where are we? Well, we've just had you can yeah, right here, the cross, right? It has literally just crossed this month, meaning that is last month's all-time low, or the bear market low, you know, was last month the bear market low. So a really interesting kind of perspective on this, right? So if we kind of zoom out a little bit, we can kind of then see, if I actually make this one ever so slightly bigger, okay, you can kind of see that we have, pull this back down, 3 crosses, okay, and if these continue, then this is a great way of saying, here we've got a cross on the 10 and the 20 EMA, and essentially meaning that we are, you know, now actually going to be progressing on upwards. So although I still believe from an Elliott wave theory perspective that we've still got one more push to the downside, although the wave counts can also indicate that, you know, we are actually done with the actual setting of lower lows, you know, there's multiple different ways of looking at it. This was another fantastic way of kind of confirming such a thing. Now, what I'm going to do as well is I'm going to turn those off, and what I'll do is actually now throw on the Gaussian channel, jump down into a weekly, and, you know, review what's kind of gone on here as well. Because from the Gaussian channel perspective, basically we pull back, then we kind of pull back a little bit further. So a few weeks in to this red area of the Gaussian channel, we've kind of bottomed out, right? We pull down, we bounce, we pull down, we pull down, we bounce, we pull down. Now over here, we've pulled down, we're bouncing. I still think we've got this one more pull back to the downside to be had, but essentially we are right in the sweet spot here, historically speaking, for where the bear market bottom has been. Okay, so when we take a look at the Gaussian channel from a weekly, or whether we take a look at it from a monthly, on the monthly side of things, things are looking very, very interesting, kind of just bouncing around the upper end here, and staying above this this Gaussian channel. But on the weekly side, we get a little bit more of that detail, and specifically, you really only want to do this on the weekly. It gives us the best kind of overview over bear market structures and things like that. Specifically, the weekly, not a 5-day, not a 3-day, not an 8-hour, not a daily, or any of the other stuff, has to be the weekly time frame. And yeah, for the most part, this is actually looking pretty progressively good. So whether we take a look at it from a Gaussian channel point of view, whether we take a look at it from a 10-20 EMA point of view, or an Elliott wave theory point of view, a lot of this data is now suggesting that it's possible that the bear market bottom has actually been achieved. That being said, I'm still waiting to see the right structure form to see whether or not we can progressively move on out of this low area that we're in. So I am expecting more of a pullback though. I mean, taking a look at it from the smaller time frames, let me actually just go ahead and put a lot of this back. Just going to get rid of all of that, and what we'll do is just get rid of this as well, and we'll just put back our actual analysis here. There we go. What we'll do is we'll jump over into our Bitcoin data. We'll jump this into our hourly. and just bring this back up here, right? So from this perspective, we have only a 3-wave structure up. So this could be a 4th wave move, quite standard, and then we pull back down. And if we do pull back down from this point, as in that is our high, then our expectations are going to be somewhere between 15,140 and 16,629, okay? Of course, we could just come back down here and then find a reset and then continue this run upwards. All of this still could be the structure in disguise. It could be a leading diagonal or something like that. So really, we're just kind of watching out to see what happens next here as we kind of look for the right kind of structure to emerge and then take advantage of that. Nothing moves in straight lines, okay? So if we are in a leading diagonal up, then essentially there will be a pretty decent correction to the downside where we should dollar cost average and then kind of move on out of here. Of course, dollar cost averaging anywhere around these zones is a pretty good idea in my opinion, because there's no guarantee that you're ever going to get the bottom. Trying to time that thing is incredibly difficult. Very few people actually ever do it. So a dollar cost averaging strategy is a fantastic way of making sure that you have good exposure gradually as the price fluctuates. It means you can get a good average purchase price, and essentially you're not going to miss out on these fantastic deals that are going on in crypto. But do remember that I'm not a financial advisor. I cannot offer you financial advice. All I can do is give you my thoughts and opinions on the data inside the charts as I see it. And it's absolutely important that you do not trade, buy, sell, or do anything based on what I've spoken about in this particular video. You should absolutely do your own research. You should consult your own financial advisor if you have one. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.